Hey folks, Dan Frio here with your real estate update for October 23rd, 2023. And yes, mortgage rates went below 8%. You guys are probably out there cheering. But in today's video, I want you guys to understand the whys behind what's going on in the markets right now, especially when it comes to mortgage rates. So let's get over to it. The reason why I'm doing this video today is there's really no economic news coming out today other than the survey or services PMI number. And we're really not going to pay attention to that today because that is the only number and it will not be a number that's affecting the markets. So let's get over to the markets and see what's happening behind the scenes. Well, the 10-year Treasury, it says up to here, stocks fall on Monday as the 10-year Treasury tops 5%. But if you see down through here, it hasn't topped 5%. It clicks up above and then clicks down below, but it's great clickbait to say it is top 5%. Well, what is really going on? Why are bond yields? You're saying, okay, I know the Federal Reserve keeps raising rates, but also the bond market is going crazy, pushing yields up to levels we haven't seen in 30 years. So I want to take a deep dive in so you guys can understand this. So how does bonds work, or what are they even issued for? Well, bonds are issued by the federal government because we have a deficit. That deficit means we don't bring in enough money in taxes and revenue to offset what we spend. That's right here in the debt clock. We bring in about $4.4 trillion each year. We spend $6.1 trillion, and so that means we have a complete deficit. So these numbers, you can really dissect these numbers if you want, but you can go into the national debt clock, click it, and this is what's going to pop up. So what I want you guys to understand is we as a government, we're running in a deficit. That means we don't have enough money that we're spending. So what do we do instead of a credit card? What the government does is they issue bonds, okay? So here's the area that I really want to focus in right now, and I know a lot of people are going to get upset with me on this, but bear with me with this. I'm not saying what's happening is right or wrong. I'm just saying the timing of this is really bad. But you might say, Dan, you have no feelings. This is a national security issue. It's humanitarian issues. I get it, folks. So I'm not bashing where the money is being spent in some of these areas. Others are a little bit of a different story. So let's look at just what's being issued right now, what the government is working on right now as we speak. Are they helping the deficit or are they hurting the deficit? Well, let's go over to the first thing we want to look at, U.S. aid to Israel and Ukraine. Now, this was just published just Friday, okay, just a couple days ago. What we're doing, we're issuing $105 billion in a national security package out to Israel and Ukraine from money we don't have. And now a lot of you guys are going to say, Dan, it's coming from the defense budget and all these other things. Again, guys, we're in a deficit. We don't have enough money that we're spending. But is this being used for good purposes? Absolutely it is. But what I want you guys to understand is how much money is being given away that we don't have. Okay. Now here's the area that really kind of, I guess, jerks my chain a little bit. So $105 billion right here in national security, which I get that point. But then we go over to this piece. The new analysis says the Biden's newest loan forgiveness scheme, I didn't realize it said scheme, could cost taxpayers $559 billion. $559 billion. So you add that to that, about $670 billion in monies we're spending right now that we don't have. So how do they do this? Well, they start issuing bonds, and they issue more bonds and more bonds and more bonds. So what's happening right now is they're saying bond vigilantes are out there and they're really taking a toll on the market. So here's what's happening in the bond markets. Bond traders are out there. They're saying, okay, we know that the government is spending like drunken sailors. We know the Federal Reserve keeps increasing rates. We're just going to keep driving down the prices of bonds and driving up those yields because we can. Okay, so that's one of the biggest things that's happening right now. The spread right now between the 10-year Treasury and the mortgage-backed securities market is 300 basis points. It hasn't been there in, I don't think, the last 30 or 40 years. Okay, that spread is huge. So technically, the spread between the 10-year Treasury and mortgage-backed securities should be about 150%, okay, or 150 basis points. If you're confused on what I'm talking about, let's get over to here. So right now, here's what's happening in the bond markets. Okay, we got the 10-year Treasury right now at 4.98. All right. So where do we have interest rates on mortgages? 8%. Okay, so there's a huge spread here, a bigger spread than we've seen in history. So that's one of the reasons right now I'm even saying when all these bond vigilantes get out of the market, we should see rates come down about 1%, 1.5%. That's where our long-term rates should be based on where the treasuries are, where the federal funds rate, and a lot of other things. So if this is a little bit confusing to you, all I ask you to do is subscribe to my channel because we talk about this every day so you learn the economics behind financing, real estate, and what the heck's going on with mortgages. So if you're out there and you're like, hey, Dan, I love what you're doing. We are in the process of buying a house right now, or we're even looking to refinance because we have a ton of equity in our house. We overdid it a little bit. We overspent on a lot of things over the last couple years, and now it's really butting us in the butt. You know, can you help us refinance? Can you help me maybe get into a reverse mortgage, maybe a home equity loan? Or you might be out there saying, I hate living and paying my landlord's rent. I would really love to buy something right now because I know rates are at the highest level right now, and if you can afford a house in this market going forward, you know, things should get a little bit easier for you as inflation comes down. So how can we help you? Well, my name is Dan Frio, like I said at the beginning of this video. I'm a federally licensed mortgage originator, so I can help you anywhere in the country as well as Puerto Rico, and we can help you. We can guide you through all these conflicts that you have and navigate the minefields in that road ahead for you. So how do you reach out to us? There's basically 3 ways to do that. You can reach out to us by going to the rateupdate.com. Here's my website. You can apply right up in there. Hit the apply now button. You'll get started on that platform. Or if you're out there and you're like, hey, Dan, I'd really love to talk to somebody about my scenario in particular, or can I email you and, you know, basically go back and forth so you can answer some questions for me? Absolutely, you can. Go to the bottom of my website and you're going to see a lot of tools here that you can work with. When you get to the bottom of the website, you're going to see a couple things right here. My phone number, 844-775-5626. Or if you want to reach out to me by email, I'll respond personally. I promise. My email address is dan@therateupdate.com. So I hope you found value in this video, understanding why the markets are doing what they're doing and understanding basically the economics of real estate. Thanks so much for watching. God bless. Tomorrow. Bye-bye.